And now for something completely different.
Forget everything you've been told by others before. Get ready for the real deal, the full story. Real talk about money, markets, life. Now, it's The Real Investment Show with Lance Roberts. Presented by RIA Advisors.
And good morning. Welcome to the show. Of course, it's the Hump Day edition of The Real Investment Show. That means Danny Ratliff joining me this morning. Talk a little bit about these new Trump accounts for miners. Is it a good thing? Is it not? We'll talk about this a little bit more this morning. Outside of that, we're going to get some more economic data. We saw ISM manufacturing in yesterday, a little bit weak there on the manufacturing front. Still in contractionary territory. Hopes are, though, that the ISM Services Index that's coming up will, give us a little bit better lift, in terms of, at least for the markets, a little bit better outlook for economic growth. Again, the economy being mostly services, about 70% services, that index really takes a lot more weight in terms of outlooks and views on economic growth. But again, we are starting to see, again, some continued kind of weakness. If we take a look at wage growth, we're starting to see some weakness in wage growth. We're seeing continued weakness in employment growth. That all suggests that the underlying structure of the economy is returning back to norms, right? So we had this really, outsized growth rate in employment and earnings growth and wage growth, et cetera, following the pandemic shutdown. But now that all that stimulus is out, economy has gotten rebalanced between supply and demand. We're turning back to normal levels. So a lot of that boost that we had in the economy is still reversing and still slowing down, and that's going to show up eventually in corporate earnings, which, as we've said before, are very, very exuberant going into next year. So if the economy continues to grind lower, again, not recessionary at all, just returning to norm, which is about 2% growth, we're going to have to see some earning reduction in some of these estimates going into next year. So again, watch that services report this week. That will be important again, and also we've got the Fed meeting coming up, so the data is feeding into that. Today the markets are opening a little bit flattish this morning. Nothing really kind of moving a whole bunch this morning. Lots of kind of talk over the last 24, 48 hours potentially about Kevin Hassett as the new Fed chairman, replacing Jerome Powell next year. Markets trying to kind of get their hands around what that would mean in terms of policy. More rate cuts, more liquidity, whatever that would mean. So markets kind of been struggling with that a little bit. And again, markets just kind of, again, right now, just kind of working through. The markets had a nice little rally yesterday, but kind of working through this first couple of weeks, as we talked about. Just expect some sloppy trading, nothing really too much to worry about. Kind of the interesting news, though, is what's going on with AI. Some data out this morning talking about Google and their AI product, Gemini, which is now getting more traction. More people are now starting to use Google Gemini than both OpenAI and ChatGPT and Claude. So again, we're starting to see this shift in the markets. Google traction in terms of the number of searches using Gemini, Google's Gemini, is increasing rather sharply, starting to catch up to ChatGPT. So again, starting to see that kind of shift in the dominance of the markets. Originally it was 3 years ago, it was all ChatGPT all the time. And now Google has made a real inflow into that AI space and is becoming a very dominant threat to ChatGPT, which is interesting because ChatGPT hasn't gone public yet. So, there's a lot of people that have been investing in private equity to get into ChatGPT, but now Google's starting to eat into that. And speaking of artificial intelligence, Apple, which has been really kind of one of the laggards in the AI space, making some changes in the top of their organization in terms of AI, bringing on a new head that actually has some development from Gemini to take over at Apple. And that's, certainly, again, one thing with Apple is that they've always been after the fact, right? We got cell phones out, and then Apple came out and just created a better mousetrap. And they're really good at that. They're really good at kind of letting everybody else kind of run in the game first, check it all out, see what's going on, then they come in and build a little bit better product, a little bit better mousetrap. And of course, this has kind of been their history with a lot of stuff. But they've been late to the game in terms of AI. It hasn't really affected their stock price much. We're going to talk about Apple here in a second. But again, they're starting to potentially make some strides into this AI space. And that was inevitable. It was always going to happen. But as usual, they're always kind of the wait and see. They're always kind of the last entrant. And so they're going to make some changes in coming into that. So we'll see how that affects Apple. But here, let's talk about Apple, Google, NVIDIA, some of the AI stocks this morning, because here's what you need to know before the bell. So it's been interesting. There's been a real dichotomy in some of these AI stocks in the Mag 7. You know, some are doing great, some really haven't been doing that well. And so it's really been on which side of the ledger you are. But there may be an opportunity actually showing up in the markets here pretty quick for some of these stocks, particularly as we head into year end, start doing portfolio rebalancing, those type of things. Let's take a look at Apple, just talking about Apple. Apple's had this nice little surge over the last couple of days. All-time highs for the company, doing great. Markets are Apple's getting very deviated from its long-term means. Historically, those types of deviations, as we've said before numerous times, it's really hard to maintain major deviations from long-term means for very long. Now, it doesn't mean the stock's going to crash tomorrow, but there's a couple of things to certainly be thinking about. If you're long Apple, this is probably one of those opportunities where you might want to think about taking some profits out of the stock. Just again, that doesn't mean sell everything. But maybe if you've been enjoying this nice rally here, maybe trim it back to wait might be a really good idea, because from a relative strength basis, we're exceedingly overbought right now. And again, we've got this very large deviation from long-term means. Again, when that happens, it's not uncommon for it to happen, but generally you're going to get a correction following that at some point. Again, kind of the last time that we were this overbought and kind of this deviated, you had a very nice correction in Apple. And pretty much this happens most every time. When you have these deviations, you're going to get a correction in price at some point. So again, this is why I just think about taking some profits, because you'll get an opportunity to buy, add back to those shares at a little bit better price down the road. But again, very, very extended, very overbought right now. It's just been a terrific run for Apple here over the last couple of months in particular. Same for Google. Of course, Google's kind of been the darling as of late, and we saw really just kind of the similar type of setup that you've got going on with Apple. And again, once again, we've got a very large deviation here, very extended from long-term means. Google's actually kind of started its correction process. It's very early, just kind of started to turn down here a little bit. But there's a very, very high momentum signal right now that hasn't yet tripped. But if you get this momentum sell signal to flip over, there is a bit potential of correction here. And again, just like with everything else, when you get these kind of big deviations, you're going to get a correction at some point. And again, it doesn't have to be massive to any great degree. But again, think about taking a little bit of profit. We just rebalanced our Google position back to target last Monday, just because of this very same reason. Just extremely overbought here. Again, has done great, nothing wrong with it. But again, just things kind of get out of balance. Markets get really excited. They kind of chase things, push things too far, and then you're going to get some type of eventual pullback. And particularly as we go into year end, we start getting portfolio rebalancing. Because of these rallies, a lot of managers are going to be overweight Google and Apple in their portfolio, so they'll have to trim those back a bit. But this also kind of brings you up where maybe there's some opportunity. Looking at the opposite of this has been companies like NVIDIA, which have actually had a bit of correction here as of late. We're getting decently oversold on multiple fronts, getting close to trigger a potential momentum buy signal here. You've corrected back below these moving averages as well. Again, there's some risk here because, again, we're still above the 200-day moving average, so we haven't completely closed that gap. But again, you're kind of getting oversold enough here that you're potentially going to get a rebalancing trade back into that stock as well. Palantir is another one on that same front, talking about AI. Very similar story here. Pullback, worked off some of that overbought condition, came down, almost tested the 200-day moving average, has turned back up here recently, triggering a momentum buy signal and coming back off a relative strength oversold condition. So again, just when you're talking about these AI stocks in general, don't forget to manage your risk positioning across the board. So again, when things get really overbought on one side, generally there's some other opportunities, even within the same market or sector, that you can rotate into. We talk a lot about relative strength, rotations, those type of things in markets. That works across stocks within an individual market or an individual sector, as well as markets and sectors themselves. So again, just, again, pay attention to your risk management in your portfolio. You'll be fine, but that's what you need to know before the bell this morning. We'll come back, pick up with Danny Ratliff. Don't go away.
Real Investment Show podcasts are now available on iTunes. Listen anyplace, anytime at iTunes.com.
What's the future of investing in 2026? Gain insights on how AI, technology, and the economy will shape your money in the year ahead at the RIA Economic Summit, January 17th at the Royal Sonesta Houston Galleria. Join Lance Roberts, Michael Leibowitz, and Thoughtful Money's Adam Taggart, plus top minds in AI, crypto, and retirement strategy for a powerful look at the markets of tomorrow. Seats are limited. Register now at realinvestmentadvice.com. realinvestmentadvice.com.
You're listening to The Real Investment Show.
All right, welcome back to the show this morning. And Danny Ratliff joining me a little bit to talk. I wanted to touch on this morning. I got a call yesterday from Fox 26 here, local in Houston, wanting to talk about these new $250 or $1,000 accounts, right? These new kind of minor accounts that are being proposed, and we'll see, how these all come across. And of course, yesterday the Dell Foundation, Michael Dell and his wife, committed another $25 billion to add $250 to these accounts. So basically, the accounts will get funded with $1,250, which is great. But again, the devil's always in the details, and then also, where is there real value to this? Does it really actually, the whole intent is to provide a generation of kids with financial opportunity in the future, give them a start, give them a seed to start with. And I think that's a wonderful thing. But as I said, the devil's kind of always in the details. So, we saw this back during the Obama administration. The Obama administration wanted to start the Obama IRAs, and we were going to give $1,000 in IRAs to kids, and that just never really came to fruition. So, just Danny, kind of give us some background here real quick, and then let's get into the details of it.
Yeah, let's talk a little bit about the good, then we'll get into the bad, or maybe the things that may be lacking a bit. And so while I do think this is a great opportunity for children to get a head start, basically the onus of is in the one big, beautiful bill the Trump administration was able to get passed, that children born between 2025 and 2028 would be allowed to have an account set up with $1,000 startup money, right? Kind of seed money, and the ability to invest in indexes. So one stipulation is every investment within the fund, they're going to give you, so picture a 401k, but the expense ratio can be no higher than 0.1%. So that's a good thing. Now, that's only for children born between 2025 and 2028. The opportunity here is that you can also invest in these funds. So you can contribute up to $5,000, you, loved ones, friends, family, whoever it may be, and your employer could also make a contribution of up to $2,500. However, that does count up to that $5,000 limit. Now, here's where it gets a little murky. So at 18, the kids can take over the account, but it must be rolled into an IRA. So now we have these funds, which are great in the sense that they're going to grow tax deferred. However, at 18 years old, they can pull the funds out, pay taxes and potential penalty if they're not using it for higher education expenses, because the ideal here is that this is going to be treated just like an IRA. So you're going to need to keep these funds in here until 59 and a half. That $1,000, should they take it out, that also counts as earnings. That's not actual your cost basis or your principal. So it gets a little murky. Now, to talk about making it even a tad bit more difficult, when you file your taxes, you have to file a form 4547. And then you're going to have to check a box saying that you would like the contribution in this account open. Now, you can start opening accounts as soon as sometime here in January, February of this next year. They're still giving us some guidance. The first contributions can be made on July 4th of 2026. So those are kind of the nitty-gritty details. Now, what Lance was alluding to, Michael and Susan Dell, they have also, so they are one of the first companies to come out and say, for any children born of Dell employees, they're going to contribute and match that $1,000. So good on them. And President Trump actually just talked about this yesterday, that there was going to be a whole lot of other companies getting behind this. They're going to start putting funds there.
Actually, just a correction. They said that they're going to give $250 to 25 million kids.
Well, $6.25 billion is going to be to 25 up to 25 million. So you got to think, here's the problem. People are going to have to fill this form out.
Right.
But so that's an extra 250. And what that is, it actually gets a little bit more in detail. So they're looking at children 10 and under who would not qualify for that $1,000 because you've got to be born between 25 and 28 to get that $1,000, which they estimate is going to cost about $15 billion between now and 2020 or 2034. But they're doing it by demographics. So they're looking at zip codes of children. They live in zip codes where the average family makes less than $150,000. So they've got some stipulations assigned to it. So part of that, number one, is that if you work for Dell, great. They're going to give you an extra $1,000 when you set up the account. If you don't, and for children who are 10 and under who would not qualify, that's where that extra 250 comes from. Now, these are families likely who are living paycheck to paycheck. They're probably not going to contribute to this. And everybody's looking at it like, oh, well, this is great. We can all contribute to these funds. Well, what's the purpose? What is the use of these funds? Because there's probably much more tax efficient ways, because now if they're 18, you want to pull the funds out, mind you, except for education or first time home buyer, like if you would in an IRA, then you can pull those funds out tax free. However, you're going to have a penalty on anything else. You would probably be better off putting a 529 plan together, or even finding a low-cost ETF that pays little dividends and just has capital gains, because it's going to be in the child's tax bracket when inevitably they turn 18, which likely it's not a whole lot of money they're making.
Well, I mean, and how many kids when they turn 18, if they see there's a bucket of money there, they're going to just take it all out. They don't care about the taxes or the penalty.
Correct.
Right.
Yeah. And
It's
so
like,
that's why
I can go buy a new car or a PC or whatever I want to buy with it.
Well, I mean, what they estimate, so they say with $1,000 at 7% annual return, you're going to be at about $3,500 when they turn 18. Well, fantastic. And that's assuming no other contributions, right? When they're born, they get the account.
And that's going to have, and that's going to be a vast majority of these accounts. So it'll be $1,000, and there will be no more contributions to it.
Well, that's right. Here's what it's lacking. Number one, great. You get a little bit of inflation adjustment because that's 7%, but that $1,000 doesn't buy a whole lot today. It's not going to buy a whole lot in 18 years. But here's the one piece that really frustrates me, Lance. Where is the financial education around any of this?
Thank you. This was the exact comment that I made yesterday on Fox 26 with Tom Ziska. I was talking to him about it. I was going, this is great, we're doing this. But this is going to be one of those other programs that eventually just falls flat on its face, because when kids turn 18, they're just going to take the money out and do whatever they want to do with it, because we're not teaching them anything about financial stability.
Correct.
Financial education. The real value is, I wish Michael Dell would take the $6.25 billion and build a financial education infrastructure, and not these stupid programs that they have in school where you go trade accounts for a semester. It's like, oh, we're going to teach you to invest. And no, you're just teaching kids how to gamble in the stock market, because the way you win that competition is to buy a penny stock and hope it goes up. So, you're not teaching individuals. We used to have home economics when you and I were in school.
Oh, yeah.
And we should still have that, right? But teach, economics of investing and saving and financial management, these type of things, because again, you're giving kids some money. That's great. They have no idea what it means. They didn't earn the money, so it's free money. So what do I care if I pay taxes on it? Because it was given to me in the first place. It just came from the government. So just give me whatever money's left and let me go spend it and do whatever I want to do with it. But this is the problem with all these accounts, is that none of these accounts, most likely, a vast majority of them, will not survive when they turn 18.
Yeah.
They will certainly not survive until you get to retirement of some sort. I mean, this is a really simple problem to solve. If you really wanted to help, and here's the other question. Why are we just doing this for one generation of kids? What about the next generation? What about your kids' kids, right?
Well, I think that's what the intent is. So the intent will be is that right now it's only from this small time frame, but they're looking to change legislation and inflation adjusted after 2028, so that $1,000 begins to go up a little bit. But you're right. I mean, government's going to spend $15 billion. Companies are going to spend a lot of money, because this will be a great retention tool. Hey, Lance, come over here. We'll give your kids this. We'll help you. So on top of your 401k, on top of anything else we may be giving you, an extra added perk is we're going to help all of your kids out. That's great. But if you're not teaching, we have a big problem with adults in financial education. Imagine right now, so we're going to put these people in charge of managing accounts. I know plenty of you out there really sophisticated, can do a great job, right? You guys are probably the exception to the rule that listen to this show. But there's a lot of people that would not know what to do. And if you're targeting even Michael Dell, which is great, yesterday was Giving Tuesday. That was a big announcement. Really nice gesture. But it's failing on the principles and main tenets of what we should be doing in America, is teaching these kids, teaching everybody the basics of just finance. Yeah. Personal finance, really. And that is exactly right, Lance, what you said. They put that money to work in a better way, you would see so much more out of it. And if you tied some type of stipulation to make them have some type of skin in the game. Tell you what, you'll get this if you work X amount of hours. You can go ahead and have the funds, but you don't actually get it. It's not vested until you begin to work, or you go through this program on financial education. Years ago, reverse mortgages were such a bad rap.
Right.
And they were, right? They were going to areas where, low income housing, had gone way up, just areas that had seen a boom. And people are knocking on people's doors saying, hey, you can sell your house for X amount. Well, I don't want to leave. My parents gave me this home. They've never had any money. And so it was very predatory. People get the money. They still had to pay the taxes and the maintenance. Well, they blew the money. They never had any. And boom, the house ends up in the bank's hands.
Sure.
Well, they changed it, and they said, you got to go through a program, which is, I don't like red tape with government, but they did one right thing on that, is that they changed the predatorialness of it, and they made each person getting one of these loans go through an educational program. Now, granted, it's not, a month-long deal. It's like a 2-day, seminar. However, if you could tie something like that you have to cross these hurdles, I think that would be an easy way to start getting that foundation built. And then you say, okay, when you do this, that first 20% of it, it's yours. You can do what you want with it. But they're going to pay taxes. They're going to pay penalties if they take it out when they're 18.
And again, this is, we did this with 401k plans too, right? Is that, and this is a mistake that we did. So first thing, we get rid of pensions, and so the government comes along, and the guy that even the guy that invented the 401k plan,
this is the worst thing that ever happened.
Yeah, this is a terrible thing, right? So because we completely got rid of company pensions, and we put all the onus on saving for retirement on the actual individual. But then, so okay, great, fine, you've got to save for your own retirement, awesome. So now you're contributing to your 401k plan, you're getting your tax deferral, those type of things. Great, fantastic, nothing wrong with that. But then we go, well, if you need access to the money, here's all these things you can go take money out for, hardship, this loan. No, this is for your retirement. And again, the same thing with these plans. There's a real simple solution for this. It needs one investment option, the S&P 500 index, and the money goes into that $1,000 goes into an S&P index fund, and you don't get to touch it till you're 59 and a half, period.
Boom.
And at least they would have something there at 59 and a half, because it would grow over time. At least they would have something, even if they never contribute. Like, give them the option to contribute to it. That'd be awesome, right? Yeah. There'll be a few smart people that go, hey, this is a really good thing. I'm going to do this. But it doesn't need multiple options. And, I'm sure this is all going to be managed by BlackRock at the end of the day anyway. But it just needs one option. It goes to an S&P index fund, and you can't touch it. You can't take it out for college. You can't take it out for a home loan. You can't take it out for hardship. You can't touch it, because it's for retirement. If you want to do those other things, go save up money for it.
Well, I think that's exactly right. But then they're encouraging parents or other people to put money into these accounts.
Sure. Give them a tax deduction for doing it.
Well, there's no tax deduction. It's all after-tax funds. And
that's what I'm saying, though. If I wanted to incent, so you're a parent, you've got kids. I want to incent you to contribute to your kids. So you give them each $1,000 a year. That's that's quote unquote charitable donation. And you get a tax deduction for that.
Well, but that's like most states with 529 plans. If you live in a state that has income tax, well, they're giving you a deduction on your income taxes for those contributions. Like Texas, we don't get that, right? We have no state income tax. We can use any plan. But if you lived in Louisiana, you want to use Louisiana plans. In fact, we just went through that with somebody this week. We're looking at, hey, you get a $2,400 deduction on state income tax for each and every, if you contribute $2,400 to your kid, well, for each child, you get that. So in that case, that 529 plan would be way better than them contributing to this type of an account because they're lowering their state taxable income. So there's a lot of ways that you can look at this. And this is not an area that I think that I've got 3 kids. I would not put money into this.
Right.
I wouldn't.
Well, there's a comment in chat right now. It's like, why are we, bashing a good thing? This is a good thing, right? We're going to give kids money. Awesome. We're not bashing that at all, right? Yeah. It's great. We're gonna give money to kids. Awesome. What we're bashing is, and it is always the case. We saw this with the Obama IRAs, seeing it with this. Basically, anytime there's a government intervention into anything, it's done for political purposes, right? This is done to buy votes, and that's great, right? President Trump gave me $250, so I'm going to go, vote for them. $1,000, right? Sorry. So it's a way to buy votes. What we're saying is wrong with the system is that it's not going to provide the benefit. When you read the articles for all this around, this is going to benefit an entire generation of kids. They're going to be so much better off. We're going to solve this wealth gap problem in the U.S. by doing this, by giving these kids a leg up for the future. Our point is that the way you've structured it is going to undermine the entire system because all these kids will just simply withdraw the money when they turn 18. Because that's the way people act. That's what people do. Why is there such a financial wealth gap in the country? Yes, we can all blame the rich people. We can all blame the financial markets. We can all point to the Federal Reserve and say zero interest rates and all this. There are a ton of people in the bottom 80% of this country that have saved money, done the right things, grown their wealth, and have moved themselves from that bottom 80% into the top 20%. They've done that. The vast majority of Americans don't because they lack financial education. They don't have the ability or desire to cut their spending in order to save money and in order to work that budget. We spend more than we make. That's why we're up to our eyeballs in credit card debt, everything else. Those are the things that we need to be resolving. That's what Danny and I are bashing is not the program. The program is fantastic. It's great. It's wonderful that we're going to be doing this. But tied to that needs to be the financial education and then the guardrails to keep individuals from doing what they always do, which is the worst possible thing, right? They take the money and they go spend it on something that they want today. I've got to have this today, so I'm going to take the money out of this account. And I'll put it back later. I'll save up later for it and I'll get it back in. And they never do. Because that's the financial nature and education of the country as a whole. That's the point that we're bashing is that this has to be structured in a manner that keeps people from doing the worst possible things to themselves, which they always do.
Yeah, I don't think there's any necessarily bashing. It's the unintended consequences. It's the lack of education around it, and it's the murkiness of how you actually set the accounts up for the time being. There is talks that it's going to be a lot easier in 6 months to a year, but like the government, most of those things take some time. But yeah, the biggest problem in general is going to be the lack of skin in the game for children when they receive those funds, the lack of financial knowledge, and right now they're trying to say, hey, this is a great thing. You can put your money here too, and it's going to grow tax deferred. But guess what? You could do that with a 529 plan if you've had that account open for 15 years. You've made the contributions within the last 5. You can convert up to $35,000 into a Roth anyways, without all the tax penalties and all the other issues. Whereas you're going to have other issues when you're looking at just a traditional IRA. So there's other ways and means that I think we can get to where we're trying to go. But you're right, the guardrails are gone. There need to be more stipulations, and you need to quit having what we'd call the leakage, right? Rich and I always talk about leakage in accounts. They give too many opportunities for you to take funds out. They don't actually help anybody get ahead with the understanding of how to utilize these funds. Listen, we could fix this. I would rather spend every dime of that on actual financial education and work programs than actually giving them the money, because it's going to have so much more meaning and you're giving somebody a head start. Not $1,000 isn't going to be anything in 18 years.
Or if you want to give them $1,000, $2,000, $3,000, give them $5,000. I don't care, but have a financial education program. They have to go in order to get the money.
Correct.
And it's just somebody made a comment in the chat, and it's a really good comment. In order to drive, you've got to go to driver's education to get your license.
Correct.
Right. Same thing here.
That's what I was saying. Do it like a cliff vesting, like you'd have on a 401k, and say, okay, if you beat this hurdle, you went to this educational class, you can now do this. Oh, you've worked 20 hours in the last month.
You can now do this.
You can, you get the next 20%. Those small things, I think, will give them, you're starting, number one, a really good habit. We need to become a country of learners, of people that, everybody's too involved on TikTok and the rest of this crap that's out there. Spend some time and don't follow that influencer who's telling you how they created a $10 million estate out of nothing, right? Out of a buck. Yeah. That's BS. Stop it. Let's find somebody that actually does it, really does it in real life. Didn't go rent that private jet they're sitting on for the last hour to film a video.
Yeah.
Find people, find mentors, have a mentor program. I mean, so many small things that we could talk to kids about right now. Dive into a book, understand the basic concepts of finance, start saving, start giving them an allowance or giving them chores and with an allowance and saying, hey, you can move X amount over here. Here's how you spend the money. If you're going to tithe, you're going to give, you're going to save, you want to spend. Here we go. These are basic concepts that everybody's too busy to spend any time dealing with. Mm-hmm. And that's why we are at the point we are. And it's not going to stop.
Right.
So that's where you need to put exactly that. You need to put some guardrails associated with it. You need to have them cross those hurdles to say, here's, you get X amount. And then maybe it actually means something.
Yeah. Well, no, and look, we already have plenty of evidence of the stuff that we're talking about here, right? And so we're not just saying, the stuff that we're saying is not just stuff we're making up and saying this is how this is going to turn out. The reason we're saying this is because we've seen this over and over again, and we see it right now. Take a look at 401k plans. A really good example is 401k plans, as we were saying earlier, right? So we forced everybody to get into 401k plans now. Okay, so let's talk about participation. Out of everybody that works, only about 50% of employees actually have access to a 401k plan because they're expensive to maintain, expensive to operate. And if I have a small business, I don't, of 2 or 3 employees, it's not worth setting up a 401k plan. So a lot of small businesses, about 50% of all employees are employed by a business with 5 or fewer employees. So they don't have access to a 401k plan. So then let's talk about the other 50%. Of the other 50% that have actually access to a 401k plan, only 50% of those actually contribute to the plan. And of those that actually contribute to the plan, most of them contribute the bare minimum just to get the match.
If they even do that.
Even if they do that. So the point is that we've given these vehicles for people to financially improve themselves, but they don't take advantage of them. Why? Because they have poor financial education. They have lack of the ability to save money at home. They don't know how to do it. They spend everything they make and then they go into debt. Those are the things. And again, this is our whole point, which is it's fine to do these programs, but to do it without creating the financial education behind it, to explain how this stuff works and to get people to understand the importance of this, and the future outcome of it is the big challenge. And that's why, again, when you take a look at the breakdown of the wealth gap, right, this big wealth gap that we all talk about, yes, it's a problem. We have a wealth gap in the country. But what separates those in the top 20% from those in the bottom 80%, almost hands down, is the fact that, and I'm not talking about people who inherited wealth, right? We're talking about people who built wealth. The difference is those individuals that built wealth, they live below their means, they have strong financial habits, they invest regularly, they save money, they're focused on what they're doing, they understand what the future outcomes are, they manage their money well if they do it themselves or they have a financial advisor do it for them, but they are focused on that aspect of their life. The other 80% are just simply buying everything they can off TikTok and wondering where all the money goes every month. So that's the challenge we have to address.
Well, it's just creating those basic habits. And, not everybody's going to have that. I would even be inclined, this is going to be against probably the norm here, but if you want to go to a trade school, when you graduate, we'll put X amount more into the account, right? Sure. We have a lack in the trades. We see what's happening with AI.
I just had an electrician at my house yesterday.
Yep.
3 hours of work, didn't solve the problem, $470.
So do the math on that. He made 100 and what, an hour?
Yeah.
Yeah.
So, yeah, go be an electrician.
It didn't solve the problem.
Did not solve the problem. I actually had to call a different electrician to come out to actually fix the problem. So there'll be another $500 bill at the end of this to fix. Our house got struck by lightning over Thanksgiving. So we lost power to the front of our house. But again, it fried a couple
Isn't
of
that
outlets.
like the second time?
No, that was the other house. They got struck by lightning.
Man, maybe
So
we got to talk about how you're living, Lance.
the fact that I live behind St. Giovanni's Catholic Church, literally the church backs up to my backyard. When I look out my window in the morning, I see the cross on top of the church, right? I don't know, maybe God's trying to tell me something. So, but no, we have a big transformer right behind our house.
Yeah.
So God took that one out.
Oh, that stinks.
So, but anyway, the point is that there is going to be a need for 500,000 electricians over the course of the next 5 years because of all this AI data center build out. Yeah, we need to be pushing kids into trades.
Yeah, and that's something that's really lacking. And if you have a good trade, let's say you're doing something, you do it really well, and you've got some type of background in entrepreneurship, or you're teaching them how to manage money, how to grow a business, man, I think there's so much money to be made in the trades.
Oh, yeah.
Like, that is just sitting there waiting.
Yeah, and AI is not going to replace you yet. AI will, once they have robots that they can put artificial intelligence into, then maybe trade work is going to have a little bit more of a threat, but there's no threat right now.
Yeah, none.
Yeah. Now, if you're in office work, there's a threat. So, anyway.
Well, interesting concept. I like the idea. Nobody's mad at anybody giving kids $1,000. Great head start. Just think about it before you start putting your own money into it. I would certainly encourage everybody to get out there and open the account. If you're eligible for it, get an account open for the kids. It's great. But know about the pitfalls. Think about the things that you can do as a parent. Your responsibility. It's not the government's responsibility to train them up on any of these things. It's our responsibility as parents. So think about it in that way and say, all right, we're going to give them a head start. Start having those conversations on a regular basis and give them an early understanding on how these things work and let them make some mistakes. Do it now while they're young, and they can come back from it versus when they're much older and they, just light money on fire at some point.
So I have a rant I want to finish up today on.
Okay.
I read this article. I wanted to get your. I saved this article specifically for today.
Oh no!
Well, because you've got 3 kids.
Yep.
Right. I've got 4. I had 4 that were young. I still have them. I didn't get rid of them.
They're off the payroll to some extent.
But they're off the payroll, right? They're on their own. And what's funny is they all now, before when they were growing up, I couldn't get them out of bed till like noon, right?
Yeah.
And now they all get up at like 6 in the morning and they're good to go for the day, right? So there's just, anyway. But here was this is a new nationwide report from Amerisleep.com, and it highlights a growing problem facing parents and students. American school mornings are becoming harder than ever, even as science continues to warn that early start times are harming children's sleep, mental health, and academic performance. To understand what mornings look like in households across the country, Amerisleep surveyed 792 parents with children in preschool through high school. The results show families are stretched thin, waking early, scrambling through long routines, and fighting fatigue before the school day begins. The findings arrive... Brent's over here with his small violin. The findings arrive at a time when states are deeply divided on school start times. Okay, so here's the issue. So schools start between 8 and 8:30, right? What time does your school start?
The youngest is 7:55.
Okay, 8 o'clock.
The other 2, so we have 3 in 3 different schools now for the first time. The other 2 are 8:50.
Okay, so between 8 and 9 o'clock.
Yeah.
All right, so 8 a.m. and 9 a.m. in the morning. So parents have to, so here's the challenge. This is where I had to laugh, considering I get up at 3:30 in the morning.
Yeah.
Amerisleep's new data paints a clear picture of the preschool day rush. Parents wake up at 6 a.m. on school days. They spend an average of 47 minutes getting children ready. 48% of mothers and 35% of fathers say they feel morning fatigue. Drink a cup of coffee, okay? 37% of moms and 30% of dads say they need a break from the school morning grind. 42.9% of parents say mornings are difficult, and among those struggling, 76% report delays, often from sleepy kids and parents exhausted from the night before. Hey, here's a clue. Get your kids off social media, before they go to bed so that they don't have the blue light keeping them up all night, and basically have them shut down their phones so they actually go to sleep on time. That might be a good start.
Yeah. I feel like I need Michelle in here for this one. No, I agree. And I do think start times are odd with kids, right? Especially if they do need more sleep when they're young, yet we do have them starting. So think about this. If I want to put my kids on the bus, it's going to be, I think the bus comes like 6 something.
Yeah.
Right. So no, I mean, it's something that's achievable. What drives me nuts is, the kids want to sleep in on the weekday. Okay. And they like school. But on the weekend,
they're up cracking dawn.
6 a.m., yeah. It's like
They're good
before
to
the
go.
sun, they're ready. They're waking us up. If we're not up already, it's like, go back to bed. But, we're multiple times having to get them up. And so there is, I can understand the fatigue aspect of it because especially with multiple kids, look, it's life though. That's the stage you're in.
Thank you.
And,
and look, do some things like set your kids' clothes out the night before, right?
Yeah.
It's not hard.
I mean, we have a constant battle.
Have the lunches packed the night before.
Yeah.
Right.
And that's a constant battle, right? I mean, our kids are very busy with different sports and activities. And so by the time they get home, they do their homework, get ready for bed. They're getting up and, hey, guys, everything's laid out. Go make your lunch. Get all your stuff together. And, some days it's really good. And when it's great, it is great. But, man, when it's bad, it's like, this. You're 12, 11, and 9. Like, I'm not making your lunch. Go do it. You know what's for breakfast? Well, I don't know. If you complain about, one of them's going to complain about something at all times.
Sure.
You know this with 4, right?
Absolutely.
You want to go out to eat? Nope. Hate that place. Like, what? You loved that place last month. No. Just on principle, one of them has to always,
absolutely
throw a monkey wrench into any plan. And so inevitably, same things with breakfast. And so we've kind of got to the point like, all right, here's your available options. You figure it out.
Yeah. And that's the way we did with our kids too. They got up, and this is the thing that when we were sending our kids through school, right, is that we woke them up at 6 o'clock, and basically they had to take care of themselves at that point. And literally, if they came out in their PJs and didn't get dressed, they were on the bus on PJs.
Yeah.
And you know what they learned? They learned the next day to put their clothes on so they didn't have to go to the bus on PJs.
Yeah.
Right? Or whatever. And so, this is, and again, it's just about teaching kids discipline. And, our kids had to go to bed at a certain time. We shut off social media. They didn't have access to those things. I shut off Wi-Fi every day.
In the house? So we don't have that problem yet because they don't have phones.
Right. So, but yeah, we just shut off Wi-Fi. And then until they did their chores, they couldn't get the password. So, it's just, but you just had to establish discipline. And by establishing that discipline, you take all that stress out. The problem is again, what are parents and kids doing at night? They're staying up till 10, 10:30, 11 o'clock at night, watching TV, YouTube, whatever it is. They're not getting enough sleep, and then that makes it hall to get up in the morning. You could move the start time of schools till noon, and say
still be a problem.
And it's
the
still
kids
going to be a
stay up
problem.
till 2 or 3.
Yeah, it'll just all you'll do is just shift it. You're not going to create a solution by adjusting the start time. You've got to create the discipline at home and the structure to take that stress out of mornings.
Yeah, I do think the start times for schools are kind of interesting because you have them staggered, which I can understand if you have multiple kids. You have to get them there.
Routes.
But you also, some of them are kind of funky. Like our middle school or intermediate and junior high are on the same bus. But they're 2 different places. They're not like right next door. But then high school starts at 7 a.m. or 6:55. And those are probably the kids that you could argue going through puberty that probably need more sleep. It's kind of backwards if you think about it.
Well,
and they could drive themselves anyways most of the time.
So the CDC says that kids need 8 to 10 hours of sleep. Okay, that's fine. That's reasonable.
Mine get that.
Yeah, of course. 70% of high school kids do not get do not get that much sleep on school nights, which means that on the weekends
they're staying up.
Exactly.
Yeah.
Because on weekends they're apparently getting plenty of sleep, right? Because they're sleeping until noon or whatever. But again, it's about discipline, structure, those type of. But the funny thing about this and why I laughed about this when I read this article was because, every parent I know that's raised kids has gone through this. We all struggled with the mornings. We all struggle with this. And guess what? We survived. It wasn't the end of the world. We didn't need to go adjust school times to make things better. We just adapted to it at home and made it work.
The interesting thing is that study shouldn't have been on the kids. It should have been on the parents.
Yeah. Thank you.
Like, they got it backwards here. Kids are sleeping fine. It's the parents that don't get any sleep.
There you go. All right. Anyway, all right. That wraps up the show for the day. I just had to get that in.
Yeah, no, that's a good one.
All right. Thanks so much. We'll be back tomorrow. Michael Leibowitz live in studio tomorrow. He's actually in town today, so he'll be live in studio tomorrow. We'll talk about the upcoming Fed meeting, everything else going on in the markets as well. So I'll be tomorrow's show, realinvestmentadvice.com. Make sure go to that website, click the link, get your tickets to the upcoming summit, January the 17th. It's going to be a really good event. Tickets are on sale now. They are selling out pretty quickly. So be sure and get your ticket now if you want to come. We do have a block of rooms. If you're coming in from out of town, would love to visit with you. So again, get your tickets now at the website, realinvestmentadvice.com. See you back here tomorrow.